Hi everyone, Fritz here, and in this video we're going to go over
Hey Fritz, I saw your video last week on opening a small business as a retirement fund, but I don't see myself as a business owner. Is there a financial solution or product that acts as a pension which you could recommend for someone like me?
All right, well, let's just use that as our topic today. So in this video, we're going to go over annuities. So annuities are a retirement solution meant for people that are approaching retirement. And that could be in the age range of 50 and above. But what an annuity does is it acts as a pension. If you don't know what a pension is, it's a guaranteed lifetime income that's given to you by the company that you worked for if you worked with them for so many years. Say if you worked with a company for 20 years, they take the average of all 20 years that you work with them and give you a percentage of that, say 40%. But a lot of companies don't give out pensions anymore. It's really restricted for state and government workers. An annuity is meant to replace that income that was lost from a pension if you are planning on having one. The way that it works is it'll typically take a lump sum of money and put it into an account over a waiting period. That waiting period could be about 5 to 10 years. And then once the waiting period is up, you will start to receive your guaranteed income moving forward. Say for example, we have $100,000 to put into an account. That $100,000 goes away for about 10 years. After the 10th year, we can start to pull out $1,000 every single month. That's $12,000 in a year. And now you might be saying to yourself, well Fritz, by my math, after year 8, you would lose money, right? Or there's no more money in the account. How do you still get money? And that's a great question. And I actually prepared a graph for you. Right here. And so, as you can see on this graph, that yes, after year 8, you've run out of your principal, but that's the whole purpose of the waiting period, is that the company has been able to save and grow your money, invest it as well, and have it work for them, so they guarantee you that monthly income for the rest of your life. And so the incentive with an annuity is to live a long and healthy life after retirement. So this is what the graph looks like if you're looking at just your principal, but considering that the company has had time to invest and grow your money, let's look at this graph again with not just your principal, but the guaranteed income. Wow, and that is pretty impressive. But you might be saying to yourself, Fritz, I don't have $100,000 to just dump into an account like that. How can I fund an annuity? Now, one solution for this question might be, do you have a 401k? Because the annuity is in the same tax category as a 401k, you could roll over some money from your 401k. Using easy numbers again, say you have $200,000 in your 401k. You could roll over $100,000 into an annuity. That way you don't get hit with the income tax as well as the penalties for pulling out too early. Use that money from the 401k to build your annuity, and you still have some money in your 401k for when you do retire. And that becomes a powerful 1-2 punch where you have money sitting in an annuity to give you guaranteed income, and then you still have your 401k that's still growing for you while you're working, especially if your company's giving you matching. You don't want to miss out on that. That's a great way to start your retirement. It's a really, really good foundation to start from. But now, there are several annuities out there. How do you know which one to pick? There are 3 key factors that I would recommend that you look for in an annuity. The number 1 factor that I would really suggest that you look for is, does it have a step-up feature? Because this company is going to be investing and growing your money, if the market does really, really good by the time that you start to pull out your money, they may have a step-up feature. So going back to our original example of $12,000 guaranteed income every single year, if the market does really good, maybe your 12 goes to 15 and then to 18 the next year. But no matter what, you're guaranteed your $12,000 every single year. That's how a step-up feature works. It'll only bring you up, it'll never bring you down. You have the floor of your guaranteed income. Another thing that you may want to look for is it RMD friendly? Because we are talking about retirement accounts, the RMD is the required minimum distribution. This is the required amount of money that you have to pull out of your tax-deferred accounts by the time that you reach age 70 and a half. So an annuity could be built so that your guaranteed withdrawal every single month is going to make sure that you clear the RMD by that time frame. Now, for these last two features, the step up as well as the RMD friendly withdrawal, the terms and agreement will vary from company to company. But this last one, a lot of companies are starting to include a return of premium, the ROP. Why is this so important? Because as you saw from the graph, that an annuity is meant to protect you in a long, healthy retirement, meaning that you live way past your retirement years, meaning that whatever amount that you put in, you've gotten back and then some. But what happens if you pass away too early? A lot of the people that are putting into annuities want to say like, I want to at least get my principal back. How do I do that? So let's just say, for example, you've used up only half of the principal in your annuity. What happens to the other half if you pass away? The other half will actually go to your beneficiary and act as a death benefit if you pass away too early. A lot of companies are doing this now, and you might be saying to yourself, well, Fritz, how does the company make money by doing that? Don't forget, they've held on to your money for 5 to 10 years, but in that time frame, they've been allowed to grow and invest your money, so the company has made some profit as well. Now, 5 to 10 years is not set in stone. There are some annuities that will release your money immediately from you putting it in, and some that go over the 15-year mark. But typically, the longer the waiting period, the higher the guaranteed income every single year. And the way to know how your money is being invested in your annuity is simply by looking at the name. There are several different kinds like fixed annuities, index annuities, and variable annuities with guarantees. All of those annuities, the biggest thing that you want to look for is what is guaranteed to you. Are you happy with the monthly income? Are you happy with the step up, with the RMD friendly feature, with the return of premium? Are you happy with these guarantees? Because with the annuity, this is money that's going to be passive to you for the rest of your life. You need to make sure that it's going to be able to support you, whether this is going to be a good investment moving forward. When you're looking at an annuity, know that there are several kinds, but make sure that you're okay with what's guaranteed to you. That's what's important, because you're going to want passive income for the rest of your life, and an annuity can help you do that. But how do you want it structured? Depends all on you. And that's how an annuity works. That's what it does, and that's who it's for. If you had any questions on annuities or the different types of annuities, let me know in the comment section down below. And if you enjoyed this video, please leave a like and subscribe. I'll see you in the next video.